Hello everyone, how you guys doing? I'm still short the market. Let's go ahead and take a look in today's video at the large tech stocks, the dollar, the VIX, the bonds, and everything to judge where the market is headed. All right, so without further ado, let's get started. First and foremost, let's take a look at the large tech stocks as an indication of where the market can go. Number one, Google clearly does not look very bullish. Apple, it reversed off the highs. Everything basically gapped up and we reversed, and now we're about to close at the lows. Okay, so Apple does not look too bullish. Meta also does not look too bullish. We failed below this major level of support, and this is clearly not bullish. Netflix also is not bullish. This was one of the biggest losers, and before it was actually one of the biggest winners. But now today, Netflix really started to capitulate, and there's still more room to go to the downside on Netflix. We can still easily fall down to the 670 level. We're at 690 at the moment, so there's still some downside potential on Netflix. NVDA, this is not the sort of setup that bulls really want to see. We could easily, tomorrow, we can potentially gap down lower. Shorting NVIDIA, though, going bearish on NVIDIA is not the best trade, in my opinion, but everything it doesn't look bullish, okay? AMD as well. AMD is started to bounce a bit, right? We got to about 50% of this major red candle on October 15th, and then we failed. So now there's more room to go to the downside, and AMD has room to go to at least 151. 152.50 area down here, so there's more room to fall on AMD also. And let's take a look at Microsoft. Microsoft also, this is not like Microsoft looks almost identical to Amazon. It's not the setup that you want to see. Got a bear flag retest, failed. Amazon bear flag sort of retest, failed, and this is just clear cut. This isn't like Amazon specifically is really showing that the market wants to make a decision at 190, and it keeps on failing as we get close to this level. Tesla is just holding the lows. There's not much to look at on Tesla, barely any movement. So with that being said, all of these large tech stocks do not show amazing buying opportunities. What I want everyone to look at is if it would be a good long opportunity. So we generally only look for longs into extreme weakness with proper risk reward. A lot of these setups, does it make sense to go long at a level of resistance when that is showing weakness? No, not really. So a lot of these large tech stocks are not showing amazing longing opportunities. Pragmatically, the only good longing opportunities on these tech stocks probably going to be Tesla, AMD along that trend line. See this trend line? We might get a bit of a bounce off of this 152, 153 level. But even then, it's just it's not the best long opportunity. So large tech stocks don't look too great. The other thing that I want to mention is that this Friday we have options expiration. Generally, heading into options expiration and afterward, the market tends to pull back. So we're going to have to see if the market ends up pulling back based off of OPEX this Friday as well. That's something to take into consideration. The other important thing is that next week and the week after that, large tech stocks are going to start reporting earnings. So I'm going to look at the updated dates for all of those things over the weekend's video, but specifically we need to see a bit of a pullback, a lower pullback, because my main thing is, say for example, Google is reporting on the 29th, right? So Google is reporting, a lot of these large tech stocks are reporting into the end of October. Say Google is reporting on the 29th. Google's not that great of isn't that great of Meta is better. Okay, cool. So Meta is going to be reporting on October 30th as well. Meta is basically at all-time highs. Does it make sense for us to be at all-time highs on like any stocks? Basically, like my point is that we're at all-time highs. If we get good earnings, is Meta gonna shoot up 10% into new all-time highs? That's probably not going to be the case. So the risk reward, even for earnings, when a stock is at all-time highs like this, it becomes very, very difficult to lean bullish into earnings. What I'm saying is, heading into earnings, there's a bullish move. A lot of these tech stocks are having earnings at the end of October. We still have room to fall at the end of this week into early mid next week. That's what my target and my analysis basically is going to be. So, and regardless, these large tech stocks are showing weakness. This is a daily chart of the SPY. So we can see the SPY is currently, we're about to close on the lows for the day. We're at lows, and we had a gap up, closing at the lows. Not the best time to start heading into shorts because pragmatically we had a move lower already and we're at support. But going short at levels of resistance that completely fail over and over, amazing trade. Looking at the large tech stocks showing weakness, going short based off of those, amazing trade. The QQQ, we know that the large tech stocks are the weakest. Continuing to show weakness at these highs here at 498, came back and retesting this trend line. So for the trend line level for tomorrow, we need a close below 490.80. If we get a solid close below 490.80, specifically, if we get a close below 489, then the market should definitely start. We could definitely start seeing 480 next week. And that's my whole thought process. I am bearish. If we start looking bullish and if the winners of the large tech stocks start to show some strength, then I won't be bearish anymore. We're already up on these QQQ puts. We got 495 puts. These are in the money. We're in SPY puts. Those were up too. So it is what it is. Like, it's not too concerning if the market does move up. So it is what it is. The one thing that is starting to be a bit bullish, little bit bullish, is the VIX is now coming down to this $18.50 and $19 range. And like I said, so $17.50, below $17.50, the market is very, very bullish. $18.50 to $19 on the VIX is where the market can halt itself and continue to fall lower. So right now we're clearly bouncing on the market. The VIX is important because it has an inverse relationship to the market. If the VIX is falling, then the overall market should be rising. VIX below 1750 is very bullish for the S&P 500 and the rest of the market. But with the VIX holding this level of support, it's basically showing us that the market overall can start to fall because the VIX is holding support. So this is the only thing that is somewhat sort of like really bullish in terms of the three things I want to share: the VIX, the dollar, and the bonds. The VIX looks pretty almost bullish for the market. The bonds are important to look at because they have a correlated relationship to the market. When the bonds are rising, then the overall market is also rising. So we can see that we closed below a major level of support. If this continues to break lows, this weakness in the bonds is going to translate into the overall market, and this is going to show weakness. The weakness is most likely going to be translated into the overall market. So that's what's going on with the bonds. And last but not least, let's take a look at the dollar. So the dollar is continuing to skyrocket, but the strength in the dollar is not translating into the weakness of the market. So the reason why the dollar is important, because like the VIX, the dollar has an inverse relationship to the market. If the dollar is rising, the overall market should be falling. Clearly, that's not what's going on. The dollar is just chugging along. We bounced off the lows, but it's not translating yet into the market. So we need to see when this is going to really occur, if it's going to occur. So far, all eyes are on equities these large tech stocks. All eyes are on the large tech stocks, equities, and we basically have to see if these large tech stocks can start to hold. If AMD, NVIDIA can continue to be bullish, then that will help the rest of the market. We had a big move in semis this morning because TSM is basically had a really, really good day. And this strength translated into NVIDIA and AMD. So it's in the same sector. We got some love based off of that. But this is really the only, like, I can't really think of anything else. The IWM didn't do that great, you know, because when you're looking at reasons for why the market is bullish, all right, it's not like the IWM was rising the market. It was not holding the market up. TSM was literally TSM in the morning was almost the main reason why the market gapped up like this, because the strength in NVIDIA, AMD, and these other large tech stocks got love because of TSM doing well. This is not going to continue. Obviously, TSM is not going to report good earnings every day. So we had a good 10% day on TSM today. What ended up happening to NVIDIA? NVIDIA gapped up, and it's closing almost close to where we closed the day before. So what are you going to do? You know, it's not a very bullish setup, in my opinion. So I hope this makes sense. I hope you guys enjoyed today's video. If you did, please make sure to smash the like button, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.